On All About Stocks this week, euphoria on the Last Street as the Nifty crosses 6,500 for the first time. Is this rally sustainable? L&T is the stock in focus this week as it hits fresh 52-week highs. We'll tell you what your investment strategy should be on this stock. And Amrish Baliga has picked out two stocks that you can buy right now for returns in the long term. Welcome to All About Stocks. You're watching ET Now. Well, we've had an exciting time at the markets this week. Both the Nifty and the Sensex made new lifetime highs. The rupee breached 61 to the dollar as well. Over the next half hour, we'll tell you what your strategy should be right now, how long we expect this rally to continue for, and how can you make money off it. We'll also answer the questions you sent in during the week. And if you'd like to send in a question this week, our email ID is on your screen right now. Let me bring in my colleague Ajay to give us an update on how the markets did this week and also tell you why we've decided to focus on L&T. Ajay.
Well, Faye, it was a very eventful week this particular gone by. We've added around 4% on the benchmark indices, Sensex and the Nifty. And if you look at the big contributor sectors of this particular week, high beta sectors like banks, capital goods, real estate, all of them have added about 10% or thereabout for this particular week, mainly led by FII buying. Around $750 million worth of FII buying, which is just 250 short of $1 billion, has happened this particular week alone, as more and more traders along with institutions position themselves for perhaps a win coming in by the NDA government party led by Modi. So a lot of positioning, hope rally is on in the markets right now. Pre-election rally is also something which analysts are calling it on the street. The way technical levels on the Nifty have been taken out, the earlier resistance of 6350 was, didn't even last a day. Not only 6400 but 6500 was easily conquered. Rupee has strengthened to almost a 3-month high. Most of the traders say that this strength or the big momentum building up which you've seen in the market this particular week will carry on next week itself. Capital goods as a space stood out this particular week and on Friday, where we saw 7% jump coming in L&T, the sector leader, and some of the influential brokerages like Citi saying that this L&T, long L&T is perhaps the best recovery trade in town right now. They've come out with a report citing 5 reasons why investors should buy L&T right now. They expect 15 to 20% returns from this particular large cap, which is a very safe, sound company, in the next 1 year, saying that economic recovery will lead to sharp increase in earnings and order flow for this particular company, and valuations to look quite comfortable right now. So this is one stock to watch out for in the coming days.
All right, Ajay, thank you for those numbers. Joining us today in the studio, Amrish Baliga, Managing Partner at Global Wealth Management at Edelweiss Financial Services. Amrish, I'm so glad to have you in on this particular week because we've been talking about this for so long.
Right.
First, tell us what's driving the rally in particular. I mean, there's a lot of talk about the fact that the market suddenly expects a stable government. Why does the market expect the stable government? And how likely is it that this rally will continue over the next few months?
In fact, this is what I've been saying now for the last 3 to 4 months, that we will have a pre-election rally. And all the opinion polls are clearly pointing to the fact that we should finally have a stable government, a progressive government. So I think the market is clearly placing its bets on that. And because of which, in the last couple of days, we have seen an extremely good rally. I see this rally continuing further. In fact, earlier I was looking at levels of about 6500, 6550, which has already been reached. So I think going ahead in the next close to 30, 45 days, we could actually see levels of closer to possibly 6700, 6800.
All right. In fact, when you were here in Jan, you said 6,800, 7,000.
But then after that, we saw a good correction in the market. We saw markets closer to 5,100. So at that point of time, we had lowered the target to about 6,500, 6,550.
If we analyze what's happened over this week, we'll see some very interesting sectors come up to the top. The BSE realty sector up 5% on Friday, and this is a sector that's been beaten down now for so long.
Right.
Infrastructure has come back up again. The bank, the Nifty bank index up 10% over the week,
right.
And we saw IT take a beating. Can we read into this? Do we expect this rally to be infrastructure, realty, commodities led? Is that what you're expecting?
Absolutely. Again, the same thing that I had said about 3 or 4 months back, that this rally will be led by the underdogs. The ones which had not performed in the last 2 years, capital goods, infra, to a certain extent, possibly reality which has played out to a certain extent. And then you have the banks, you have the auto ancillaries, metals. These are the ones which will actually play out this rally.
Well, we are going to talk about L&T in a little while, specifically as a particular stock. But I want to talk about the rest of the sectors you just mentioned. Now, it's safe to say even within the realty sector, those worries are not over. And a stable government is not going to fix a lot of the problems that the realty companies are having right now. So if we are going to pick within these sectors, how important is it that we pick them very carefully based on how leveraged their books are right now and how strong their management is?
Even at this point of time, I will not pick up a realty stock.
Okay.
Because I still have concerns on the balance sheet. There's a huge amount of concern on inventory. Even in the past, like I said, if you want to pick up anything in reality, it should be the Bangalore-based ones. We had a pick of Shobha Developers. But even there, to a certain extent, we are disappointed with the last quarter results. And that's actually, it's not there in our portfolio anymore. We'll be discussing about that going ahead. So as of now, on the reality space, I wouldn't invest. Maybe from a trading point of view in this rally, yes, you could see another 5 to 10%, but that's only a trading bet.
So regular investors should stay away from.
Should stay away, no doubt.
So of the sectors that you mentioned are going to be part of this rally for this year, which one of those sectors should be focused on? And within those sectors, how do we pick those stocks?
Clearly, it's going to be capital goods, infrastructure, metals, auto ancillaries, and banks. In banks, it's going to be the private sector ones.
Okay.
And it's best to pick up the bigger of the players. For example, capital goods. I've been focusing on L&T all through as compared to BHEL. And that's really performed extremely well. Similarly, in banks, in the private sector banks, you should go in for Axis, ICICI Bank, HDFC Bank. Among the smaller ones, you can go in for DCB, where in fact we still have a price target of about 65, 67, at least in the short term. Looking at longer term, we are looking at about 80, 85 for that stock.
All right. Now, you mentioned stocks that we should be buying. And given where the market is right now, I want to ask you about stocks we should be selling. We saw SBI come up a little bit.
Right.
We saw stocks like Coal India has moved up a little bit. These are stocks that investors have been holding for a while. They've been disappointed. A lot of the views are telling us that not much is going to happen from these companies. Give us a list of stocks right now that would, at these levels make sense to get out of.
I don't think you should sell anything right now.
Okay.
Basically because you'll have outperformers, you'll have performers, you'll have underperformers. But in a huge rally which we're looking at now, even underperformers are going to move up. So even if you're talking of real estate sector, where I'm not really bullish right now, but still if you're holding on to the stock, you've held on to the stock for the last 3 years, don't exit in the beginning of a rally right now. When you have others possibly appreciating 15-20%, these will appreciate 5 to 7%. At those levels, you should exit.
Okay, but there is a possibility that we might miss the bus entirely and miss the rally and then wind up holding these stocks for longer than we intended.
No, but then you should decide to exit. But this is not the time to exit. I think you should look at exiting closer to May 1st week before the election results.
All right, let's talk about L&T now. You've been telling us to buy L&T for 6 years. I want to know that do you believe that this sort of rally that we've seen in L&T over the last 1 week is going to continue?
Even at this point of time, I'm quite bullish on L&T. Again, going by the premise that we may have a stable government going ahead. And if we have a stable reform-oriented government going ahead, it means that there will be enough focus on infrastructure, where we've been lacking for the last couple of years. And if that takes off, L&T has to do well. Even in the given scenario, they still have been getting extremely good orders. Recently, they got an order for about 5,000 odd crores in a market like this. So in a good market, where people are looking at investing asset creation, I think L&T should do extremely well.
So what happens to L&T if we don't have that stable government?
If we don't have a stable government, in fact, if we have a third front government or a hung parliament, possibly you'll see a correction in L&T. But I don't think one needs to really panic, because it is not going to disappear. So if it's quoting at about 1,200, 300, and you bought at those levels, I'm talking of, already it's 1,200. It's possible that it can correct to levels of about 950, 1,000. But I don't see this stock going down to 500.
So there are two types of investors who are watching right now. Those that have been holding, like you said, L&T for a while. Those that may not have L&T in their portfolio and are asking, is this a good time to buy? Is this a good time to buy L&T?
This is a good time to buy L&T, but I would say that if you have not bought anything at all in the past, then buy something at this point of time. And this market is not going to be a one-way street. Although we are talking of levels of 6,800, it will not be 6,800 one way. There would be corrections. Utilize those corrections to enter. And this is exactly what I said in the last 6 months. Utilize every correction to buy. And whenever there was a correction, people used to think that it will still go down further. Even recently, I think 1,500 levels, 1,525, I think was an extremely good level to get into the markets, but people didn't utilize that.
What is your new target on L&T right now? We've had, again, analysts over the last, right through Friday who said that 1,400 seems unlikely this year. Do you agree?
I don't.
Okay.
I mean, I had a target of about 1,240. I'll be revising that now to possibly 1,440 or 1,460. I think that's very much possible in this year. Again, I mean, the logic is that, yes, you may have a stable government. If that happens, you should see levels of 1,440. But I don't see levels of 1,440 possibly before the elections.
All right. So L&T is a good buy at this point. Buy a little bit if you have to. R.S. Kumar has written in. He has 100 shares of L&T, which he bought at 800 rupees. He also has 50 shares of Hindalco, which he bought at 112 rupees. Should he hold on to those stocks? Obviously, hold on to L&T. What about Hindalco?
Hindalco also should hold on because quite positive on metals overall, especially steel and aluminum.
We have a portfolio now that we're going to look at. Vijay has written in. He sent us his entire list of stocks. The top of the list, 23 shares of Bajaj Finance bought at 1,300 rupees. Should he hold on to it? It's in your portfolio as well.
Absolutely. That's there in our portfolio. And again, I'm quite bullish on the other stocks which he has. I think he has ICICI Bank. Even that I'm quite bullish on. So I think he should just hold on.
All right. Also 50 shares of ICICI Bank, which again Amrish has in his portfolio. Hold on to that one as well. 43 shares of HCL Technologies, which he bought at 1,100 rupees. That was a good price to buy it at. Hold on. Can we expect more?
Yeah, surely. I think, I mean, although in the next 1.5 to 2 months, you may have these stocks underperforming to a certain extent, but it's not a sell because they should form a part of your core portfolio. Because in case something goes wrong with the elections, you'll have these shares which will come to your rescue.
All right. He also has JK Lakshmi Cement. He has 100 shares. He bought it at 119 rupees. Now, again, if we're talking about infrastructure and realty, then it's the cement sector is linked to that. But
Absolutely.
in this particular stock?
I mean, there would be a lag period between the infra taking off and then cement. But a stock like this has been performing decently well. So I think you should just hold on.
And finally, 100 shares of Sun Pharma, which he bought at 605 rupees. Sun Pharma is another one of those stocks. Over the last 2 years, it's completely run away from the market. Can we expect it to continue to perform like that?
It may not continue in the short term, but just like what I was telling you about the IT space, similarly in pharma space, this has been my best pick in the last 1.5 to 2 years. So I'll just continue holding on to that.
All right. So the defensives are important.
Absolutely, it is important.
Don't be taking them out of your portfolio at this point. Time for a quick break. When we come back, we'll talk about Amrish's 2 stocks that he thinks we should be buying at these values. Don't go anywhere. Welcome back. You're watching All About Stocks on ET now. Amrish Baliga is still with us. He's helping us figure out a strategy to make money in the stock market. Now, we've asked Amrish to pick out 2 stocks that he thinks makes sense right now for us to buy on Monday morning. The first of the 2 stocks is United Spirits. It ended the week at 2471. Are you confident about the management at United Spirits?
Absolutely. It's Diageo now.
Okay.
So, I mean, that brings in the confidence. The margins in the past were decently low. It had come down to about 13%. It was 23 earlier. It came down to 13, which we now expect to move up to about 30, which is the average for Diageo.
Okay.
So, and at the same time, consumption story, which has been there all through, and I mean, they have a market share of more than 50%. So, from all those points of view, we feel that the future for United Spirits is great. And from a shareholder point of view, it's possible that going ahead, there could be one more offer from Diageo, which could be at levels higher than now.
All right. Well, there are 2 companies there are 2 stocks from that company. There's United Breweries and there's United Spirits. Why not United Breweries? And for those of our viewers who are holding United Breweries right now, what's your call on that stock?
No, that also one can hold on. But in fact, here we see the growth story much better than the other one. So I think you should look at buying this and holding on. In fact, we have a price target of about 3,200 for this stock.
All right, the first recommendation there, United Spirits. The second recommendation that Amrish is making today is Infosys. So obviously, since you did say that Infosys is going to have a soft month or so, given the rally that we're having, would you like us to keep it on our list and then just keep buying Infosys every time we see a dip?
Over the next couple of weeks, when you have weakness in the IT space, Infosys is also going to correct. Utilize that opportunity and buy Infosys at lower levels, because clearly, I mean, we have seen a turnaround, especially after Nayan Murthy has come back, and that we expect that to continue. Just like the way I used to recommend all the cyclicals when chips were down for them. Right now, I wouldn't say chips are down for IT, but it'll underperform for a few weeks because the rupee is now decently strong. So from that point of view, I think one should utilize that and buy Infosys at this point of time.
Well, there is one argument to this where a lot of analysts are now saying that Infosys has become a trader's stock because every time Mr. Murthy comes out and makes a statement, it moves up, then it softens down a little bit. That's my first question to you. My second one is, again, why not one of the smaller companies that have larger headroom for growth, like an Emphasis, Tech Mahindra, or an HCL Tech has run up a fair amount? Why Infosys? It seems like a really large company. How much more can it grow?
In fact, like I said, we are looking at a price target of about 4,400 levels. And in case one is able to buy it closer to about 3,500, I think from there it's extremely good sort of a return. Again, when you're talking of those, blips which you see when Mr. Murthy talks about Infosys, possibly the traders can utilize that, but that is not really meant for investors. Investors should look at the figures, the quarterly numbers, which has been decently consistent after he's taken over. So from that point of view, I would say that story is going to continue.
All right. So if you're talking about 4,400 on Infosys, how long will that take?
4,400, in fact, I'm looking at those levels possibly by about October, December this year.
All right. 4,400 on Infosys by October or December this year. Now, if you have questions about these two recommendations, feel free to write to us and we'll ask Amrish to answer them for you the next time he's in the studio. Let's take a few more questions. Nilesh has written in, he has 100 shares of Jet Airways, which he bought at 475 rupees. He also has 100 shares of JP Associates bought at 70 rupees. Should he hold on to it? Jet Airways ended the week at 224. Now, there's a huge price war happening among airlines, and it's going to get worse. We know that when AirAsia does launch. What's your call on the entire sector and Jet Airways in particular?
Airlines have never made money in India, and with this sort of a discount, I don't think they'll make money at least in the foreseeable future. But again, should you be selling? Yes, it should be there on your sell list, but I don't think you should be selling it right away.
So use the same theory, wait until...
Absolutely, because you still have time till the next quarter results when it will be pathetic. But before that, you will have a rally in the market. Utilize that rally to exit.
All right. So discounts on airlines are a good thing if you're traveling. They're not a good thing if you're an investor. JP Associates, what would you like him to do?
JP Associates, again, because of a cyclical, being a cyclical stock, this I think will move up with the market. But I think you should look at levels of closer to about 65 to exit.
All right, so both of those on the sell list, but watch those stocks carefully. Hitendra has written in 200 shares of Manappuram Finance bought at 21 rupees, and also Geetanjali Gems bought at 68 rupees. Should he hold on to both of these stocks?
No, I think both of them again should be on the sell list. Geetanjali is going through very tough times.
No, but is it likely then, given what we're expecting over the next 3 or 4 weeks, that Geetanjali will be one of the stocks that profit from it?
Because see, in a rally like this, even the cats and dogs will start moving. But then you should know which are the cats and dogs in a portfolio to exit. You should not get carried away during that rally that possibly they could move up much more from where they are. So when you have seen a decent move, I think you should know when to exit.
What would be a decent move on Geetanjali and Manappuram at this point?
Manappuram, if you're getting levels of about 27, 28, I think you should just exit. Geetanjali levels of say about 85, 90.
Quick break. When we come back, we'll take a look at Amrish's own portfolio. He has beaten the Nifty. The Nifty itself has done so well. We find out how he did it, and we'll talk about stocks like Maruti Suzuki and Ramco Cements. Don't go anywhere. Welcome back. You're watching All About Stocks in ET now. Amrish Baliga is with us, and we're figuring out a strategy to make money in the stock market. And normally on this show, we ask all of our guests to illustrate their money-making abilities. Amrish has designed a portfolio for us, and this is a young portfolio. It was started on the 4th of January, but it has beaten the market. With an overall gain of 7.47%, the Nifty over the same period is up 5.4%. So we have beaten the Nifty. I'm going to give you a recap of the stocks in this portfolio. We have Maruti Suzuki, ICICI Bank, that's up 12% since we bought it. L&T, Z Entertainment, Alembic Pharmaceuticals, Pidilite, Lupin, Wipro, Ramco Cements, Bajaj Finance, and Shobha Developers. There's also Motherson Sumi. That's up nearly 18% since we bought it. Amrish, great portfolio. Do you want to make some changes given what the market we're seeing right now?
Yeah, in fact, I made some changes. We have sold Maruti, Shobha Developers, and Ramco Cement. Maruti, the reason was because of the decision on the Gujarat plant, which we didn't like. We don't believe it is good corporate governance. something which is not expected from Maruti. So because of which we are selling Maruti. Shobha Developers, we did not like the last quarter results. We have seen some amount of slowdown. Although I won't say I'm bearish on Shobha, but then since I've decided to have only 12 stocks in the portfolio, that had to go. Similar is with Ramco Cement. They're not been able to ramp up the prices, the cement prices. So from that point of view, I think it'll be a slow mover. So I'm exiting that.
But viewers who are watching right now, who bought Maruti Suzuki based on your recommendation, is it fair to say that we'll definitely expect Maruti to run up with the rest of the rally? So it makes sense to hold it, like you said, the rest of the stocks till the 1st of May?
They can hold on, but then I believe whatever I'm buying now could possibly give them better returns. So if they have more money to buy new stocks, then possibly they can just hold on to Maruti and buy the new stocks which I'm recommending.
All right, so tell us what you're buying now, other than United Spirits and
United
Infosys.
Spirits and Infosys are recommended. And the other stock is Ipca Labs, where again we have seen extremely good growth from the company. We still expect the growth going ahead to be about 17-18% CAGR for the next 3 to 4 years. Extremely good filings as far as ANDA is concerned. That also should, going ahead, improve the margins for the company. So at the current levels, I think one should look at buying it. Should see levels of about 1,020 plus.
All right. So you will then have Wipro and Infosys in the same portfolio.
Yes.
You have Alembic Pharmaceuticals already, and you'll be adding Ipca Labs to it. Is this because you're just, cushioning it up in case we see a bad government? Is this the defensive?
Absolutely. I think you should have some defensives in your portfolio because there's an uncertain event going ahead. If we again see something like what we saw in 2004, people were expecting one specific party to come, and I think the market was dead sure that they would come. Something else happened, and you had circuits for 2 days. So at that point of time, you require some cushion for your portfolios, and these are the stocks which will cushion it.
All right. So give us a cap. If we were going to put a defensive or 2 defensive stocks in our portfolio to cushion us from any possible fall, what should be the cap on the portfolio for those stocks?
I think you should have at least about 40% in defensives.
40% in defensive. Yes. Would that be IT and pharma, or would that also include FMCG at this point?
It would actually include, all the 3, but it will be more of IT and pharma.
All right, more of IT and pharma, and it's important, especially given where we are in the market and on the national political scenario, that you do cushion your portfolio irrespective of how much money you have in the market. I'm going to give you a recap of Amrish's portfolio as it stands after the changes. United Spirits, ICICI Bank, L&T, Z Entertainment, Alembic Pharmaceuticals, Pidilite, Lupin, Wipro, Infosys, Bajaj Finance, Ipca Labs now, and Motherson Sumi. If you have any questions about that portfolio, write to us and we'll ask Amrish to answer those questions for you. Keep sending in your stock queries. You can reach me personally on Twitter. Amrish, thank you so much for coming in and spending time with us. That's a wrap on this show. Thanks for watching.